Hello everyone. I'm here today with Rich Consul from INCORE Capital Management, an investment franchise of Victory Capital. We're here today to discuss the convertible bond market and some of the interesting performance patterns we've seen since the pandemic has hit, as well as the turn of the new year 2021. Rich, can you provide us some insights on the convertible bond market?
Yeah, thanks for the question, Kelly. Last year, the broad convertibles market was up over 46%, making it one of the top performing asset classes last year. But just like we saw on the broad equity side, where technology led all sectors up, is very similar in the convertible space last year, where non-rated and high yield technology convertibles really outpaced all other investment categories within the space. And what we saw is a lot of these non-rated and high yield convertible technology issuers actually started to kind of take advantage of investor demand in that sector, and it allowed them to start issuing convertibles with a zero coupon. And it's left us in an interesting situation where investment grade convertibles now actually have a higher yield than non-rated and high yield convertibles. And this flies directly in kind of the face of convention in fixed income, where typically you get a higher yield by taking on a lower quality balance sheet. This relationship is inverse right now in the convertible space. And it's happening for a number of different reasons. But one of the things that we've started to see kind of emerge thus far in 2021 is it seems as though investors are getting back to the meat and potatoes of old traditional fundamental valuations. And what we've started to see is kind of quality rise to the top. And as this kind of quality trend of rising to the top occurs, we really think investment grade convertibles with their 3% yield and their higher quality balance sheet actually gives us a great opportunity to kind of pivot within the convertible space for the foreseeable future. We think this is an opportunity that investors are only just becoming emergently aware of.
Given the current bond market, do you see interesting aspects of application for convertibles in a broader fixed income portfolio or even just a direct investment?
Absolutely, Kelly. This is one of the most challenging environments for fixed income investors that we've seen in decades. This low yield environment is really forcing investors to kind of reach for yield. And there's really only two levers that most investors have in the fixed income area to increase yield. It's either you take more credit risk on or you take more duration risk on. And the problem with taking more duration risk on is that it makes you more susceptible to rising interest rates. Well, what have we seen over the last 6 months is that 10-year yields have started to kind of shift up. And that's starting to produce negative returns for a lot of traditional fixed income investors. Well, when interest rates typically go up, they go up because of rising economic optimism. Rising economic optimism typically makes the stock market go up as well. Why that's important for convertibles is that call option, or that option on top of that bond, allows you to participate in that stock upside. So as the stock shifts up with the interest rate shifting up, the convertible feature allows you to actually participate with that upside, offsetting the negative impacts of interest rates going up to traditional bonds. The second thing convertibles solve for is they actually also have a really good yield right now. So when you look at traditional ag portfolios, your yield is less than 1.7%. The 10-year yield is under 2%. And investment grade convertibles are actually around 3% right now. So you're getting a yield advantage by being in the convertible marketplace, specifically the investment grade convertible marketplace, while also creating a situation where you're less sensitive to rising interest rates. You're really solving for two issues that are facing every fixed income investor as we sit here, right now. But not only is it a tactical opportunity, but according to our research, and we have a published white paper out there that I highly recommend everyone reading, we actually believe that there's a strategic importance to owning this asset class over the long term. And what we found is that overlaying convertibles in a portfolio helps shift up into a more efficient risk versus return portfolio.